Hello and welcome to The Trading Bell. I'm Kipkemboi, and today we are taking a look at the derivatives market. What is it? What is it all about? This market was unveiled in Kenya over a year ago. How its performance? Going to be speaking to Terry Adembesa, who is the Chief Officer at the derivatives market right here at the NSE, and we shall be breaking it down for you. But before we do much, let's take a look at his profile.
Terrence Adembesa is the Chief Officer, Derivatives Market at the Nairobi Securities Exchange. Terry has over 15 years' experience in investment banking and notable achievements in financial sector engagements that have had and continue to impact directly on the lives of ordinary East Africans. Terry was responsible for the development of the Growth Enterprise Market segment, GEMS, the NSE and the FTSE International Index Series, the Real Estate Investment Trust, Exchange Traded Funds and Derivatives Market, next at the NSE. In his current role, Terry provides leadership for the derivatives business and product development function of the NSE. Terry was responsible for the development of the Growth Enterprise Market segment, the NSE and FTSE International Index Series, Real Estate Investment Trust, Exchange Traded Funds and the Derivatives Market, next at the NSE. In his current role, Terry provides leadership for the derivatives business and product development function of the NSE. He serves as a member of the Executive Management Committee and its subsidiary company, NSE Clear Limited, and as the Secretary of the NSE Board of Directors Derivatives Oversight Committee. Terry is also a board member of the Association of Future Markets, representing Africa and the NSE.
Terry, welcome to the show.
Thank you very much.
Yes, it's been a year.
Yeah.
July 2019, that's when the market was unveiled in the local scene. Before even we go on over how its performance has been, let's start with basic understanding. What are derivatives? What is the derivative market?
Yeah. So basically a derivative is a contract in which the price and the specifications of that contract are set for in the future. So you decide when the delivery date is, how much the price is, but it's set for the future. Mm-hmm. That's slightly different from your current spot market, which is what the existing shares market was, where, you know, when you go to the market now, the price that you get on screen now is basically your spot market. Mm-hmm. But it's possible that you can trade based on a future price or future delivery on a contract. Mm-hmm. And the contract could be the underlying contract could be in anything. Could be on the index, could be on shares, could be on commodities and the like. So the NSE currently has contracts on the index, the NSE 25 index, and on the a number of shares, the most liquid shares, counters. Yeah,
definitely. And you've touched on the futures.
Yeah.
Normally, the derivative market has been broken into segments globally. So far, just briefly underline for us the breakdown of the derivatives market, and in our market we deal with futures, to be specific.
Yeah. So there's a number of ways to classify derivatives markets. One, there are exchange traded markets, which is what NSE has, and then there are off exchange markets. For example, when banks do swaps, those are off exchange transactions. Okay. But also under derivatives, there are different types of contracts. So you have what we call futures contracts, which is a plain simple contract. It's a future based on the futures price. There is what we call options. There's what we call swaps, and that kind of thing. So in terms of growing our market, we initially had off-exchange transactions. Based on the global financial crisis, a number of global regulators have insisted on some form of either on-exchange traded contracts or on-exchange or on-reported transactions of the market transactions. So first, we want the local environment, the local investors to be comfortable with futures contracts before we can onboard other slightly more complex contracts.
Definitely.
Yeah.
The normal question will be unveiling the derivatives market in 2019.
Yeah.
Where was it before? Why not earlier on? Explain to us that trajectory of the market and the environment where we were for us to unveil this over a year ago.
There's a transition that investors usually would go towards, or markets go follow through. One of the things, is we understand there's primary markets. You have IPOs and the like, issuers coming to markets to raise money. You have secondary markets where now trading is happening. But now we are getting to a level where you have what they call tertiary markets. And tertiary markets are onboarding on the existing primary and secondary markets, where you have now derivative contracts, slightly more complex or more detailed financial instruments being traded. Mm-hmm. So it's a trajectory in terms of markets. So that's one thing. Two is that, there's been a drive to move Kenya from frontier market status to emerging market status. And one of the things as a emerging market status economy is the ability to have onboarded such kind of markets, financial instruments, ways in which you have slightly more detailed processes towards clearing and settlement of transactions, and that's a process.
Yes.
It's a growth path towards getting Kenya into emerging market status.
Let's speak about a normal, person out there who's very interested, in stocks, in investments at the NSE, and they have little money here and there. For them to invest into a derivative market, in the simplest form, explain how they can get to do that.
So it's pretty simple. One, we have about 8 trading members. The list of those trading members is on the NSE website. You'd contact your trading member, and you'd ask them that you want to open an account. So what the trading member would do is, send some forms, or there's a, what they call KYC. You send in your, notification, your documentation. This is, NOAA and that kind of thing. And then they'll ask you to fund your account. As you're funding the account, they'll also ask for some risk sort of statement from you to assess what kind of risk abilities you're able to absorb. So there's 2 ways. So your broker could advise on what you can trade, or you can
get out of there
do
by
your
yourself.
Own. Exactly.
That's quite an initiative indeed. And now let's talk the status quo. You had touched on the growth trajectory that you're experiencing as a market. So far, for over a year now, that the derivatives market has been operating. How has been the performance?
So the performance is growing based on where we're coming from. We're seeing the number of contracts, like year to date, we've traded in excess of 800 contracts. Based on last year, the first 6 months last year, when the market went live, there's a growth of over 45% in terms of number of contracts being traded. In value terms, I think we are now pushing in excess of 50 million Kenyan shillings. Average, on average, we're seeing the bulk of the participants are your retail customers, and your retail investors, and a bit of your, I don't want to call them family offices, but your hedge fund sort of clients, who take very active positions in markets. So that's what we're seeing. We have 8 trading members, 2 clearing banks, Stanbic and Cooperative Bank.
Definitely. COVID-19, it has been very disruptive to every sector of our society, and the market has not been spared either. And for derivatives market, this has been an opportunity, to say the least. People have been able to flip the coin around. You know, the issue of risk assessment. If I can trade in the future, especially at a volatile time like this, then that is more secure. Explain to us how COVID-19 has affected derivatives market.
Different people view these markets, have viewed markets differently during COVID. Initially, of course, there was the worry that, you know, there was volatility, based on how the global economy, the local economy was doing, prices were going down. And true to word, prices on the spot market have gone down. For example, the NSE 25 is down close to 30%, 30% year to date. But the truth of the matter is, for example, on the spot market, the traded volume is up about 7% higher than what was traded same time 2019. On the bonds market, we are about 99.5%, which is about flat on same period 2019. One of the other things we're seeing is that there is much more retail onboarding into the markets. Retail clients want to trade for themselves, want to easier access in terms of how they're onboarding with a trading member. So we're seeing a bit of that. We're seeing a bit more volumes in terms of what were initially called penny stocks.
Yes.
So there's been some good signals coming off from COVID.
Yes.
But also, of course, the concern is on the decline in prices. There's a way in which you can invest in a derivative security, a different derivative contract, which then ensures that you hedge against the possible or the actual decline in prices of securities. And what happens is, for example, if you take a future view that the price of a security will go down, and then it actually goes down, it means you bought a short contract on the market, and then the security goes down, you make money, right? And the vice versa, of course, is true. If you assume that prices will go up and you buy a contract and the prices go up, then you make money that way.
Yes.
So because your spot portfolio has gone down, right, in valuation, but you're hedging based on buying a short contract, so that when the prices go down, then you make money on that. You see, you've hedged, you've lost on this side, but you've gained on the other side. And the good thing about the derivatives contracts is that you don't spend the same amount of money that you spent on your spot portfolio. This is because derivatives are leveraged products. You pay a fraction of the contract to participate in it.
Definitely.
Yeah.
And maybe slightly touch on partnerships, which I think one of the recent ones with EGM Securities. How important are these partnerships to the derivatives market?
They're important in the sense that, the exchange is like the wholesaler of the products. The distribution is done by our trading participants, our brokers, our trading members. So the more we onboard trading members who have reach and access to a varied array of investors, then the better. So that we are then able to get our products out there, get many more investors participating on the market. So this, we continue onboarding trading members. Our most recent is EGM Securities. They were previously they're licensed as an online broker.
Yes.
And we're also talking to others. Would like them to come on board and enhance their reach, enhance the NSE's reach to clients out there. Not only local clients, but also foreign clients. You find many of these online brokers, for example, have market access to different other clients in different other countries. And so, and they want to trade, for example, you could find a broker who has clients in Nigeria, Ghana, over Africa, and they want to trade the Kenyan markets.
Yes.
So how do we give access to those clients? One of the best ways is through clients and partnerships such as this.
All right.
Yeah.
Projections into the future. I know you mentioned the issue of growth trajectory, but for the derivatives market, its future, how does it look in the next 1 year, maybe in the medium term as we finish up?
It's exciting. On average, we're doing slightly under 100 contracts a day. Would like to drive this towards 1,000 contracts a day. So onboarding new trading members, onboarding market makers, that drives up participation. Giving easier access to clients to onboard, and then also giving them access to trade for themselves. So that is part of the work we are doing towards enhancing participation. And we're excited. We are pushing. We are doing a lot of training to make sure people understand what are these products, how do you access these products, how do you trade them, and there's a lot of information on the NSE pages, on our different channels on Twitter and YouTube and even Facebook. But also many of our trading participants are also doing a lot of webinars and that kind of thing towards educating clients.
Definitely.
Yeah.
The future is bright. Thank you very much, Terry, for this wonderful conversation.
Thank you.
Very edifying, to say the least. And I think the challenge is on us to take interest on this market. Google. It's very simple. Go to the NSE page, check derivatives. What is it all about? How do people make money of it and take advantage of these instruments and avenues? With that said, of course, we have market analysis next.
Time for the markets analysis, and there you have it from the statistics. And joining us to help us understand and decipher these particular numbers is Marceline Gatebi from Goodson Capital, where she is an investment associate. Many thanks for coming.
Thank you so much, Maina, for having me.
Absolutely. Quick question is about the elections happening in the United States. Is there an effect that we're seeing on the markets and especially on the currency?
Okay, Maina, I think it's good, first of all, to note that our market is mainly foreign dominated.
Yes.
And this definitely poses a number of risks when it comes to activities taking place mainly in the US. And for example, now that we have the elections coming up.
Yeah.
But I also want to highlight the fact that we wouldn't expect so much negative impact when it comes to the market.
Yeah.
And this is mainly because whether or not the elections are taking place, the foreigners, what they're looking for is any investment opportunities that they can actually capitalize on.
Okay.
So for example, they will be looking at stocks which actually give them a lot of liquidity when it comes to their trading agendas.
Yeah.
So ideally, we wouldn't expect that to have a lot of effect, or rather the elections to have a lot of effect when it comes to the markets. But again, also, I think much of the effect will be mainly going towards the side of the currency and not on the stock market per se.
Okay,
Yeah.
that's good news for the market here. Now, let's go straight to the indices, and I'm seeing very little volatility. It's almost like a flat curve. What do you have to say about it?
What we have seen so far in the market is that we have seen it's been a net sellers market.
Yeah.
So ideally, what has been happening, we have seen a lot of foreigners actually divesting or offloading their shareholdings within the Kenyan companies, and mainly on Safaricom.
Yeah.
And this could have attributed to the fact that we have seen stagnation when it comes to the index, and some of those indexes are actually price weighted, like the NSE 20. So when you have a price weighted index, when there is not much movement when it comes comes to the prices and the volumes,
Yeah.
definitely will not see any significant movement on the indices. So that's why we could be talking of a flat movement when it comes to the indices.
Okay.
Yeah.
Let's jump into the top gainers, and I am seeing there's quite some domination by the banking sector, quite a little bit of movement here and there. I can see BK Group, I can see Stanbic, I can see Housing Finance. What's your comment on this?
What we have seen in the market currently is we are in a period whereby banks are actually announcing their third quarter results, and ideally investors are actually looking for such opportunities when there is material information coming into the market. For example, now when the companies are having corporate actions, they are making announcements for their third quarter. So what we are seeing is the investors are taking advantage of this information to be able to drive the prices. So investors are actually coming into the market to buy the banking stocks and possibly decide whether to offload once the announcing season has come to an end. So we are in a reporting season which could also be driving the banking sector performance.
Okay, and then let's finally look at the volumes as of Monday, which is week to week. I'm seeing a lot of movement from the blue chip companies, the Equity Bank, Safaricom, Centum, KCB. Do you have a comment on this?
Oh yes, I think maybe what I could comment on the movement for those particular stocks is the fact that our market is mainly dominated by the blue chip. They control a significant turnover when it comes to the market overall, and these possibly could be the reason why we are seeing a lot of the movement from the market mainly being from the blue chip counters. Secondly, if you look at companies like Safaricom, majority of those are actually companies which are in the top 5 when it comes to market capitalization, and a company like Safaricom at this point in time they're actually looking to announce their first half earnings results. So ideally we would expect a lot of activity. Like I mentioned earlier, we have seen significant sell-offs from the foreign investors. So that also could be causing the volumes to be a bit high when it comes to the performance of these companies. That is for Safaricom, who are looking to announce. Also the banking stocks, like I mentioned, they are also announcing their Q3 performance. So that also has contributed to having a significant movement and significant volumes when it comes to their trading.
Great.
Yeah.
All right. Many thanks, Marceline Gatebi, Investment Associate, Goods and Capital, for that particular analysis.
Thank you.
All right. Time now for Markets 101, and we want to define this term. What is interbank rate? What is an interbank rate? Marceline, over to you.
Minor interbank rate, it's the rate at which banks borrow from one another. So ideally what will happen in a situation whereby, for example, a tier 2 bank doesn't have enough liquidity possibly for lending, they would consider buying, or rather they would consider borrowing from another bank, possibly a tier 1, to just have more liquidity for advancing in terms of credit. So the rate at which they borrow from one another, the rate at which the banks borrow, one bank borrows from the other, which is usually overnight, is what is referred to as an interbank rate.
Okay.
Yes.
So it'd be right to say that sometimes banks go broke.
Or in a layman's language.
In a layman's language.
Yes.
Okay, thanks for that. All right, time now for your questions. And that was the question. What question would you have for the NSE? And Ken Brighton's Mbugua asked this question. Can you trade directly with the NSE? Brokerage houses tend to delay. Marceline, how do you answer Ken?
Ken, maybe just to get back to you, NSE is an exchange, and basically it has hosted a number of trading participants who appear to be the brokerage houses that you are actually referring to. So ideally you cannot be able to trade with the exchange directly, but you will be able to trade with the brokerage houses directly, and then those are the people who are supposed to link you up to the exchange directly. But good enough is that now we have these online platforms which actually enable us to actually trade more efficiently and be able to interact with the market more efficiently. And NSE has actually come up with an online platform whereby it has hosted a number of these brokerage firms which you can actually access directly for your own trading purposes. Ideally, this should actually help you when it comes to you performing your trading activities because of more efficiency that has been enabled by the NSE online platform.
Okay.
Yeah.
That's a very good answer, Ken Mbugua. Now you get it. And of course, we can also tell Ken that, you know, at the NSE app that was launched just a few months back, you can also get all those brokerage firms there to enable you to trade. Thank you so much, Marceline, for that. And keep asking your questions, because right here we'll be answering you the best way we can. Let's take you down memory lane now to the NSE historical fact for this week. So there you have it on the historical fact of the week. Marceline, thank you so much for coming and being of help, especially to the questions that people ask directly to the NSE.
Thank you.
All right, remember you can always keep the conversation going by your feedback on the social media handles appearing at the bottom end of your screen. I want to end with this. Always diversify your portfolio when it comes to investments and think the capital markets. Remember, as they say, don't put all your eggs in one basket. For now, it's good night. See you same time, same place on the Trading Bell Show.